You want to sell at the price. This is FSP Academy again. So today I want to break down the concept of fair value gap, especially how to find the most valid or the strong and the weak fair value gap, how to identify the weak and the strong fair value gap. Before I continue, I would like to explain the fair value gap for those guys that have no prior knowledge of the fair value gap. So basically, a fair value gap is an imbalance within a price chart. You understand? It is an imbalance. Why is it an imbalance? It is an imbalance because the wick of this first candle and the third candle does not overlap. This happens when there is a huge order, a huge order from the buyer or from the seller. You understand? So when there is a huge order from the seller that outweighs the buyers in the market, we are going to experience what we call imbalance. And in this case, it will happen in this form of bearish imbalance. You understand? Because the market is selling aggressively. This signifies that the pressure of the sellers outweighs that of the buyer. That is why you see a huge gap left behind, and it is common that this price will definitely be filled. This imbalance will be filled. You understand? You understand? It is common that you would likely see the price filling this imbalance. So now, in some cases, you will see two imbalance within a price move, within a price swing. So in that scenario, the question now will be, which of the fair value gap are you going to trade? So let's go to the demonstration, and I will show you the strongest or the most valid fair value gap that you should trade in that context. So let's go there. So this is it, right? You can see I clearly have fair value gap 1, you understand, 1 and 2, you understand. This is the one. In this scenario, which of them is the strongest? You know, I've already marked it, and I'll tell you this one is the weakest, and this one is the preferred fair value gap that most advanced traders like to trade, and I will tell you why it is the most preferred shortly. So if you look at this thing, you know, when price move, when there's a price swing, sell to the downside, price normally return to maybe a discount level, you understand, before the market will start selling down again. Why is it considered like that? You understand? The market will return to maybe 50% of the previous swing. You understand? And in that case, if you have a fair value gap below the 50% level, you want to wait. You don't want to trade that fair value gap immediately. You want to wait to trade from the fair value gap at the extreme. You understand? It gives you more leverage. Why? Because, okay, let's assume in the normal trading world now, you understand, if a price of a product is falling and it has reached the bottom, if you buy below here, if you are buying below here, are you going to sell here immediately? No. You wait to at least for the price to gain momentum before you start selling, right? That is how this thing are being done. You understand? You wait for the price to go to the highest place before you sell. You understand? So that is it with the fair value gap, and so it is with the fair value gap. If you have two fair value gap in the price swing, you don't want to sell from the first one, which is the weak, considered as the weakest fair value gap. You understand? You want to sell at the price that is considered favorable. You understand? You want to sell at the higher price. You understand? That is why it is considered in most cases that the first one in this bearish fair value gap, in this bearish imbalance, the first fair value gap is always weak. You understand? Price will normally take it out. You understand? And that is why it is advisable to trade from this place. You understand? Sometimes it may not happen the way you like it. You understand? It may not happen the way you want it. The price will not return immediately as it touches this place. Sometimes it will go a little bit higher, but keep it in mind that even if you want to trade, you have to trade the fair value gap You have to trade from the extreme, you understand? Trade from the Don't trade from this place. At least wait for price to take out this fair value gap, feed this second fair value gap as well before you start trading from maybe any of the other block. It may not return from the fair value from the strong fair value gap immediately, right? But at least once the price has taken out this fair value gap, this last fair value gap, there's a higher chance that the price will definitely return to the downside, especially if there's an order block sitting here. You understand? So the whole idea is that you shouldn't trade. Even if you want to find your entry, don't find your entry within this first fair value gap. So this is the weakest fair value gap, right? You don't want to trade from this weakest fair value gap. So I hope I'm making sense. And if you have any question, you can equally reach out to me on my Telegram link. The link to my Telegram will be dropped below here. You understand? Below the video, right? So let me show you a live example, right? So this is a live example. This is the first fair value gap. This is the first one and the second fair value gap, right? You understand? As it in this case, you can see exactly that the market didn't respect the first fair value gap. It moves down to the second fair value gap, right? And that is what happened exactly. So some guys will be like, okay, let me sell from here. The moment they start selling from here, boom, they will have a quick win, but this quick win will not last long. The price will take them out immediately it is reaching this place. So it will use this first fair value gap as a liquidity. You understand? Use this fair value gap as a liquidity before touching the last one. And from the last one, what do you see? A massive sell to the downside. So this thing is mechanical and it has been proven that it works majority of the time. So you don't want to you don't want to be trading against what has been proven to work, you understand? Even if you must trade, wait for price to return to this strong fair value gap, or at least to take it out before you start selling from any of the preferred fair value gap or preferred order block. Preferred order block. You understand? So this is where I call it a this is where I end the video, right? So if you have your question, you can reach out to me. This is FSP Academy. We collaborate with our team member to help you learn more about the forex market and make informed decisions so that you will not trade blindly. Peace out. Thank you.